Hello and welcome to San Diego Market Watch, where we bring you timely, accurate information about the San Diego County real estate market every single week. We have been off for a couple of weeks because we were on vacation, and then of course we had Thanksgiving, but we are back, and boy has the chart gotten interesting. I mean, what in the wide world of sports is going on here and here? We have had some ups and downs in our chart over the year here, but right now we're looking at some interesting movement. So let's take a look and figure out what's going on. And as always, if you want to keep this information flowing your way, remember to like, subscribe, and comment. We love to answer your comments, and we love to get more subscribers, because that just helps all of us to keep this information coming your way every single week. So, what's happening right now? The first thing that we're going to take a look at is the number of homes for sale. I have been saying for weeks and weeks and weeks that the number of, even months, the number of homes for sale is remaining relatively steady. Well, it is no longer. It is plummeting, let's say here. And plummet may be too dramatic a word, because really what we're seeing here is a move from, almost 4,300 to just over 3,800 homes for sale. So it's really a swing of about 400 homes. However, it does make for a nice dramatic drop in the chart, doesn't it? So what's going on with that? Well, sellers are really not anxious to dive into this current market because things are obviously not great. Sales are very slow. Interest rates are high, although have come down a bit, which we'll talk about in a minute. But, by and large, sellers that are in homes right now are staying put. They have a great rate on their mortgage, and they know if they sell and buy something else that they're not going to have a great rate. And, with that great rate comes a really affordable payment in general. And with some of the economic uncertainty that's been circling around the overall national and global economy, people are just not in a big hurry to sell their home right now at a reduced price. Because a lot of folks do feel that what's happening right now is somewhat transitory. I'm not going to say this is going to clear up in a week or a month, but by the middle of 2023, we really honestly could be seeing mortgage rates back down to much more desirable levels, and home prices, leveling out and or picking up again. And, maybe that won't happen, but it is certainly plausible to discuss that at this point in time, just given the fact that we are in somewhat of an unprecedented economic situation where you have strong jobs, you have economic growth, yet you have high inflation and rising interest rates and a cooling housing market. There's just a lot of things going on that have not really solidified in a particular direction yet. So that is an explanation of the number of homes for sale. And when we look at new listings, we can see that those were very steady pretty much all summer, and then began to decline week over week at the beginning of November, and then in the last couple of weeks have just fallen off a cliff. Same reason, just not a lot of sellers excited about jumping into this current real estate market. Although I have been talking to a number of people just in the last few days who are actually relatively excited about jumping in, just because there isn't a lot on the market. Rates have come down a bit, and there does appear to be at least a narrow window of opportunity here in December to grab a decent sale price on your home. So my 2 cents on that is, if you have a home that you think you're going to have to sell anytime in the next 18 months, 12 to 18 months, do it now. Don't wait. Don't think that things are going to get better in January. They might, but then again, there's a very strong possibility that they won't. So anyway, looking at number of our new listings, that has dropped significantly closings dropped significantly, and pending sales have dropped significantly just in the last week. It's just that holiday slowdown, and when you're only dealing with, in numbers in the hundreds here, so it's a very dramatic looking graph. However, we're really only going from, under 500 closed sales the week of November 23rd down here to just over 200. Same with pending sales. Same with new listings. It's very possible we might see as dramatic a bounce up next week just because of the fact that it's not a holiday week. So let's move on and talk about rates. We are looking at the primary mortgage market survey here for Freddie Mac, and the weekly average mortgage rate as of today is 6.49, which is much, much improved from the 7.09 that we saw back here at the peak a few weeks ago. So that is really good news, and that is why I believe we are going to see a spike in pending sales and possibly a spike in new listings, and then in a few weeks a spike in closed sales because of all of this. And your 15-year fixed is at 5.76. So right now with your 30-year fixed at 6.49, it becomes really, really possible to get your rate down into the fives for sure, and with a really nice seller credit or something like that, down into the fours. Or if you want to throw some of your own money at the points, you can get this rate down to something that is much more workable and much closer to what things looked like, back in April and March of this year. So this is all, positive news. And the rates dropped on basically the market reaction to what the Federal Reserve Chairman Jerome Powell said a few days ago, and that is that they are going to continue raising rates, but at a slower pace, and that they're basically signaling that their rate increases are slowing. And the market likes that because inflation seems to be cooling and so on and so forth. So will rates go back up again before they come down again? Probably. So this is probably a trough, similar to like what we saw right here before there was a spike, or here we have a little trough before we had a spike. You see these things in charts and graphs all the time. But for the last couple of weeks, we've seen down, down, and down again, and that is good. So looking at median home price, this really hasn't changed much. Although we have added a new leg to this graph since we last talked to you. If you'll recall, between September and October, there was actually an overall increase in median price, and I told you last month that the next leg of this graph was almost certainly going to be down, and it is down lower than it was before we saw this little transitory spike here. So the median price is down around what are we, around 7, I forget what the exact number is. I think we're around 775 in the last report that we had. So that's what's happening in San Diego real estate right now. We are definitely experiencing the holiday slowdown. However, here in the first couple of weeks of December, I do expect to see a surge of activity. So if you're a buyer or a seller, you might want to take advantage of that right now. Certainly if you're a buyer, take advantage of the lower rates right now. And if you're a seller and you need to sell, if you know you need to sell your house, get it done now. And if you're an agent, this is a good time for you to get out there and hustle and get a couple of things in escrow so you have some closings in January. So that's what's happening in San Diego real estate. Hope you enjoyed our talk today, and we are really looking forward to catching you all up on what's been going on with life in San Diego and otherwise in our Friday live show tomorrow. So With that, I will say good day, and we will see you next week with another edition of San Diego Market Watch.